How about the furniture trade? The furniture trade, shares of Wayfair, we're watching that one, are wavering after the company announced it's going to cut about 870 jobs. The e-commerce company looking at a 5% reduction of its global workforce and approximately 10% of its corporate team. Wayfair is also currently in the process of making substantial reductions in its third-party labor costs. Now, what's interesting to me about Wayfair is we've obviously had a number of companies now that have come out and said they're either slowing hiring, freezing hiring, cutting jobs, et cetera. And there's not sort of a uniform stock reaction. But it is interesting to see Wayfair down this much on a cost reduction plan, which for some companies is seen as a positive.
Yeah, and the reason
perhaps maybe because it's not coming from a positive demand.
Yeah, I'm going to go right back to the August 4th earnings release for Wayfair, perhaps understanding why the stock is down on this. Diluted loss per share, $3.59 for Wayfair. Total net revenue down 14.9% year over year. So this is a company that is really struggling. And before this move here in Wayfair, stock's down about 62%, I believe, over the past year. So there's been a massive underperformance at a company like Wayfair, challenging few quarters, and looks like they're getting the memo very late that they're going to have to shrink their workforce.
Yeah, and this is, of course, one of the companies where we're seeing sort of the pandemic hangover happening, where a lot of people bought this stuff when they were stuck at home, sprucing up their homes, moving into a new home, buying stuff for that home. And now, that got pulled forward, and now it's sort of equalizing to the detriment of a Wayfair, for example.